It's truly a delight to welcome Mike Melby, founder and portfolio manager of Gate City Capital Management, joining us from Chicago, Illinois, presenting a particularly interesting Wide-Moat idea for Wide-Moat Investing Summit 2016. Mike, let me please pass it to you. Please begin.
Shai, thank you very much for the introduction and for having me here today. It's a real pleasure. And as he said, my name is Mike Melby, founder and portfolio manager of Gate City Capital Management. We manage a concentrated portfolio of micro-cap value companies. And today I'm going to talk to you about PICO Holdings. And we're going to start off with a series of quotes. One of the company's major assets are water rights in the American Southwest. And just wanted to pose a few thoughts from some people throughout history, starting with Benjamin Franklin and maybe some humor at the end with Mitch Hedberg. But all these are designed to show both the value of water and going forward why we think one of the major assets of the company will have significant value going forward. As a brief overview, PICO Holdings is engaged in water resource management and home building activities. The company's wholly owned subsidiary, Vidler Water Company, acquires and develops water resources in the American Southwest. PICO also owns a 56.9% stake in a home builder that's publicly traded called UCP Incorporated. PICO itself was incorporated in 1981 and is headquartered in La Jolla, California. And just going down to PICO's reported statistics, these are what will show up on a financial website. The company has a share price of $9.47, which approximates a market cap of $220 million. Due to its consolidation of UCP, the company also consolidates UCP's debt, which is almost $160 million in value, and its cash of $30 million. We'll take those out later, but just wanted to show you what the public generally sees. Yields an enterprise value of around $336 million compared to its book value of $340 million. To the bottom right, you can see the company's stock price. It's performed poorly over the prior 10 years. And in the presentation, we'll go through some of the reasons for that and also some of the reasons we think that will change. Highlighting our investment thesis, we have a target price of PICO of $16 a share, approximately $16, with the current share price being under $9.50, provides approximately 70% upside to our base case scenario. Highlighting our investment thesis, it's based on the following. Vidler, PICO's wholly owned subsidiary, owns strategic water assets in key metropolitan areas that should increase in value over time due to population growth and reduced water supplies. PICO's stub value, I'll go into it later, but we basically treated UCP's value as a marketable security. After subtracting out the value of UCP stock, PICO's remaining market cap is approximately $135 million. This is the lowest level in history and a sharp discount to both book value and what we think the company's remaining market value is as well. PICO's balance sheet is actually strong. There's no debt on the balance sheet. All reported debt is held at UCP and is non-recourse. Company has $8 million in cash and a large base of owned assets that we'll get into. In addition, UCP is potentially a value play for some investors out there as well. The company owns attractive real estate in high growth markets. The common stock also appears to be attractive right now, trading at less than 70% of book value. The management team has a new compensation structure in place that was put in place at the end of 2015, and the team's now incentivized to monetize assets above book value and return this capital to shareholder, which is a sharp contrast from previously. And finally, activist investors have gained significant influence following years of poor stock price performance, and we think there's a potential for further improvement here. Wanted to go into just a brief analysis of what I highlighted earlier. I think it's important to analyze PICO excluding its consolidated stake in UCP, and we've done that below. And so this kind of goes into the numbers that I highlighted before, but again, with a market cap of $218 million, essentially no debt on the balance sheet, and after the removal of $30 million in cash as well, the remaining PICO is left with $7.8 million in cash and a UCP value of approximately $84 million. So you take that out, our adjusted enterprise value, adjusted market cap's around $135 million, adjusted enterprise value of around $126 million. And we think going forward in the presentation, we'll show the assets are likely worth much more than that. And wanted to provide a brief overview of Vidler Water. It's PICO's primary asset. The company focuses on developing water assets in the southwestern United States. PICO acquired Vidler in 1995, and basically from 1995 through the onset of the financial crisis, acquired and developed a number of water resources. The company currently owns water rights in a number of fast-growing areas in the American West, including Reno, Las Vegas, Phoenix, and Santa Fe. Vidler's not a utility. They look to develop new sources of water and sell that to municipalities and industrial companies. They initially acquire the water through a number of means. They either buy previous agricultural water rights from farmers, ranchers, acquire water rights that haven't been used for a while, or go out and discover their own sources of water. After that, they complete the permitting process and also put the infrastructure in place that's needed to take the water to areas of greater demand. These are long-term investments, capital intensive, and many municipalities or even other investors don't have the time or expertise to bring these projects to fruition. Vidler's run by Dorothy Timian Palmer, has a staff of just under 20, headquartered in Carson City, Nevada, which is the capital of Nevada. She has a 20-plus year background in water rights and is a strong member of the team in our view. And I just wanted to touch on the basics behind what a water right is. It's the legal right to divert water and put it to beneficial use. And water rights and the law behind them vary dramatically from state to state. There are two big categories. Riparian water rights are a system for allocating water where anyone owning the land where the water passes through has access to that water along its path. And this system's common in the eastern U.S. The system common in the West is the prior appropriation water rights, and that essentially states that the first person or entity to take a source of water and put it to beneficial use can continue to use that water for that use going forward. And subsequent users can take from the water supply, but cannot infringe on the water rights of prior users. So in that regard, in the Western U.S., water rights are real property. These can be bought or sold separate from the land, deeded, inherited, things like that. And the unit for water rights, generally measured in acre feet, that's approximately 325,000 gallons of water. The value of these vary dramatically. Supply and demand, it's based on location, the state use of the water rights, and whether they can be moved from one place to another. The next slide, I just wanted to highlight the extensiveness of Vidler's water portfolio. There are a number of both water rights and land assets located throughout Nevada, Arizona, and New Mexico. And we're going to go in greater depth in 5 or 6 of these, but just wanted to provide a brief overview of the portfolio of water assets that Vidler's been able to put together over time. The first property I'd like to highlight is the Fish Springs Ranch. It's widely considered to be both PICO and Vidler's most valuable asset. Vidler purchased a 51% membership interest in the property for $4.5 million. The ranch consists of over 7,000 acres of land and approximately 13,000 acre-feet of permitted water rights, located about 40 miles north of Reno. Of those 13,000 water rights, approximately 8,000 are currently permitted to be transported to the Reno area, and another 5,000 are going through that process. After acquiring the asset, Vidler subsequently invested over $100 million, putting a 28-mile pipeline and the required infrastructure in place necessary to get the water from Fish Springs Ranch to the North Valley's set of communities north and west of Reno. Vidler dedicated the pipeline and its assets to the county in exchange for exclusive rights to transport water through the pipeline. And despite the 51% stake, because Vidler invested all of this money, they have a preferred return in the partnership, and that's accrued at LIBOR plus 450 basis points for approximately 10 years. And their current preferred return is approximately $165 million. So after any asset sales, they'll receive the first $165 million, and will receive 51% of proceeds after that. And I just wanted to go a little more in depth into the area. We'll go into it a little more greater depth, but Vidler now essentially has a near monopoly of water resources in the North Valley area of Reno. And if you look on the map at the bottom left, the North Valleys are a series of communities 7 to 10 miles northwest of the Reno-Sparks metropolitan area. And wanted to highlight that the area of Reno has recently experienced rapid growth. The number of major corporations have set up facilities there. Some of those include Tesla with its Gigafactory, Amazon, eBay, Switch, and multiple others. And the Tesla factories are actually about 25 miles to the east of Reno, and might be able to see the logo on the map there as well. With all these jobs coming into town, Reno's undergone significant growth, and the chart at the bottom right just gives you an indication of the housing market in the area. After a steep fall off during the Great Recession, both home prices and building permits have recovered nicely, and our expectation is for that to continue. There is a significant amount of both residential and commercial construction planned for the North Valleys area. It's an area that's less expensive to build in than Reno itself, and that's created a lot of demand for housing there. Vidler's identified pending projects for nearly 8,000 units. Truckee Meadows Water Authority, or TUMWA, has received additional requests aside from the 8,000 for approximately 13,000 units in the area. And a general rule of thumb is about 0.4 acre-feet of water per housing unit, and that suggests there could be some significant demand for Vidler's water supply. And before a developer breaks ground, they need to have their water rights secured for that development. Vidler and TUMWA both suspect that the area of the North Valleys has less than 100 acre-feet of water left for development. Recently took a trip out to the Reno area, had the opportunity to visit with the Vidler team, and also meet with representatives from TUMWA. They both pointed to the what was stated earlier, that Vidler has a virtual monopoly on the area, and there's a limited supply of water left to serve the area. So with that, the question is what the water rights in the area are worth. The common number expected is between $30,000 and $35,000 per acre foot, and that's based on the expected cost it would take for TUMWA to now deliver water to the North Valley, and that would include the infrastructure to put it in place and numerous other connections and fees. Also looking historically before the financial crisis, Vidler was able to sell a small amount of water rights in the area for over $45,000 per acre foot. So just given the growth, and don't think it will happen overnight, but as these developments take place, I expect initially Vidler's 8,000 acre feet of water and potentially later the 5,000 remaining acre feet to be sold and utilized. Looking at $35,000 an acre foot times 8,000 acre feet of water yields proceeds of $260 million. This would be the high end of our range. And Vidler would receive the first $165 million in proceeds, and then 51% of the remainder comes out to a $220 million value to Vidler, and that compares to the adjusted enterprise value we talked about before of around $130 million. So just with this one resource, I think the company has potential upside here. Moving on. The capital of Nevada, as mentioned before, is Carson City. The company's headquartered there and also has significant water assets in the area. Carson City is about 30 miles to the south of Reno and has benefited from the same employment trends that have helped out Reno. There are a few development areas left in Carson City, just given the land base, but the area known as the Dayton Corridor to the east of Carson City has significant land but very little water. Vidler recognized this and, in cooperation with the municipalities, completed a project to connect Carson City's water system to Lyon County's. And that's essentially provided Vidler with an area of demand for their water supplies. So there you can see the map down below. Carson City to the south of Reno, and then the Dayton Corridor on Highway 50 as you move further east. And also some housing statistics in the graph to the bottom right showing the average price of a home in Lyon County, and also that the number of units of building permits has started to increase as well. So going forward, the assets Vidler has over 2,000 acre feet of municipal water rights. The company expects after the conversion of additional agricultural water rights that they'll have over 4,000 acre feet. There is significant development going on in the Dayton Corridor. Vidler's identified development plans for over 13,000 single-family homes in the area. In addition to that, construction was just started in June for the USA Parkway. That's going to be a 4-lane road that will connect Highway 50 with Interstate 80 right next to the Tahoe Reno Industrial Center. That's where Tesla and a number of other firms are working in an industrial park. So that'll essentially reduce the commute dramatically and make the Dayton Corridor a much more attractive place to live. In 2015, just to give you some idea of what these water rights could be worth, Vidler finalized an option agreement with a private developer to sell 700 acre feet of water rights for $30,000 an acre foot. The price increases 10% a year after 2017. Applying that $30,000 an acre foot to potential 4,000 acre feet yields $120 million in proceeds, and Vidler's the sole owner of this project. In addition, the company owns 950 acres of land in the Dayton Corridor. It's currently being marketed for sale at a price of $6 million. And switching states here as well, wanted to take a look at Vidler's water assets in the state of Arizona. Vidler has long-term storage credits in and around the Phoenix metropolitan area for over 400,000 acre feet of water. This is a little different than the water rights talked about in Nevada, in that those water rights were essentially perpetual in nature. These are actually 400,000 acre feet of water that Vidler's stored or gained credits to, so kind of one-time use credits, if you will. And there are a number of catalysts, if you will, that we expect should allow Vidler to monetize at least a portion of the asset in the near or medium term. The most important being an ongoing drought that's taken place in the American Southwest. And one of the indications of that is the record low elevations of Lake Mead. And the reason Lake Mead is important is because the elevation at Lake Mead is used to determine the allocation from the Colorado River, where the states of California, Arizona, and Nevada get a substantial amount of water. And once Lake Mead goes below 1,075 feet, allocations, especially to Arizona, begin to be reduced dramatically. And Lake Mead's elevation, I checked it earlier today, was at 1,072 feet. If it's there at the end of the year, you'd expect some reduction in allocation from the Colorado, and these states are already working the way to reduce water allocations from the Colorado to kind of prevent a portion of this going forward. But that being the case, recent transactions for storage credits in the Phoenix area have sold for in excess of $325 an acre foot. If you apply this multiple to Vidler's storage credits of 400,000 acre feet, you get a number in excess of $120 million. Vidler is very timely. They put this water into storage 2008 through 2011 when water was around $75 or $80 an acre foot. So looks like there's substantial value here as well. Moving on, Vidler also owns a little less than 2,000 acres of land and approximately 6,000 acre feet of groundwater in the Arcahela Basin. That's about 70 miles west of Phoenix. In the past, Vidler's sold water rights in this area for between $3,000 and $5,000 an acre foot. In addition to demand from the surrounding metropolitan area, the area is also well suited for either the production of a power plant or the location of a solar facility, both of which would require water sources. Finally, the last water asset I wanted to highlight is Vidler's partnership with Lincoln County. Lincoln County is above Clark County in Nevada, north of Las Vegas. It's a 50-50 partnership. Vidler's invested $17 million to date and has a preferred return on that amount. The two parties have filed applications for more than 100,000 acre feet of water and eventually expect that up to 40,000 acre feet will be permitted. Currently, the two parties have just over 7,000 acre feet of water rights permitted, and with 2,900 acre feet currently available for sale. And several areas of potential demand. One is the Lincoln County Land Act, which laid the grounds for development community in Lincoln County that could house up to 39,000 units. This would be a long-term project, but given the sheer size of it and the complete lack of water resources in the area, the Vidler-Lincoln County partnership would be expected to supply that. In addition, there's an energy project that's 100% owned by Vidler that, if it goes through, would require substantial water rights, and there is a potential need for power to supply either Las Vegas or the surrounding area. So those are kind of some of the main water rights or water resources that PICO and Vidler had that I wanted to highlight. Also wanted to touch briefly on UCP, just to provide you an overview there. Again, PICO has a 56.9% economic interest through the ownership of 10.6 million Series A units, which can be converted to common stock. UCP has home building operations in California, the southeastern United States, headquartered in San Jose, California, and has almost 190 employees. PICO purchased UCP in 2008 UCP went public in 2013, and in 2014 expanded into the Southeast with its acquisition of Citizens Homes. And again, it's important to note here that the statistics on a lot of financial websites are incorrect here. They don't take into account PICO's ownership interest in the Series A units. So provided kind of an adjusted valuation metrics here. Market cap of just under $150 million and enterprise value of around $275 million. Market cap trades at 70% of book value, and stock prices also performed relatively poorly over time. And I just wanted to highlight some of the company's assets and financials. The company has a strong asset base in high growth markets such as the San Francisco Bay Area, California Central Valley, Los Angeles, Charlotte, and Nashville. The company owns over 4,600 lots and has over 400 homes in inventory. These properties have a book value in excess of $370 million, with over 40% of that land base purchased between 2008 and 2010, when prices were relatively low. Operating results have improved substantially in recent years. Revenues, profits, backlog all up, and compared to its home builder peer, relatively modest debt-to-capital ratio. Again, valuation here appears to be attractive at under 70% of book value, and the company also recently initiated a $5 million share repurchase plan as well. On the next slide, just wanted to highlight some of the historical financials for UCP and also provide a comparables sheet with some other smaller home builders. On a price-to-book basis, UCP appears to be quite attractive. Enterprise value to sales also appears attractive, and the company has had improving profitability metrics as well. Before we get into kind of the final valuation, just wanted to highlight some of the reasons why I think the company could be trading at a discount to what we think its intrinsic value is. PICO's historically acted as a capital outlet, looking to invest in undervalued real asset opportunities at opportunistic prices. This has resulted in a number of successes. I'd argue Vidler is one of them, but also a number of notable failures. The company developed a canola crush plant in Minnesota. They've also had investments in various biopharmaceutical companies, oil and gas ventures, and software ventures as well. These poor investment decisions ultimately resulted in large asset write-downs and what I feel is an increasingly frustrated shareholder base. In addition, management compensation during this time, where many investors would consider to be excessive in nature, then combined with some poor corporate governance, led to some shareholder activities. So just to highlight some shareholder activism that has occurred over the last year and a half, several of the company's largest shareholders filed 13Ds and written letters to the company expressing their displeasure both in investments that had been made and stock price performance. These efforts have had results. In 2016, the company has 5 new board members, and I think that can play a positive role going forward in further improving the corporate governance measures the company has. And in addition to the new board members, in response to ongoing pressure from shareholders, in late 2015, PICO shifted its strategic priorities from developing assets to monetizing assets. Focus now on the company is to monetize its asset base and return all proceeds to shareholders through either dividends or share repurchases. And most importantly, we noted some of the poor investments before. This greatly reduces the risk of a further misallocation of investor capital by management. I think that's a very important point to stress, knowing that it's highly unlikely for these potential mistakes to occur in the future. The compensation structure of the company was also modified. On the positive side, management salaries were reduced. Incentive compensation was also changed. The senior team is now compensated based on the premium to book value in which assets are monetized and those proceeds are returned to shareholders. The management team is entitled to 20% of the effective gain from the sale of assets. So while I think these are improvements, there's still some troubling aspects. The 50% reduction in CEO pay is helpful, but the CEO still makes $1 million a year in base salary, which is elevated compared to peers. In addition, an incentive allocation of 20% of proceeds above book value is excessive, and as shareholders have noted, book value has been reduced through impairments and being compensated to get back to the pre-impairment level doesn't seem quite fair. And management's also not incentivized to monetize assets below book value, even though it could be beneficial to shareholders to do so. UCP could be an example of that, with book value in excess of $11 a share. Finally, there's an excessive severance payout package to the CEO upon his termination. With all that in mind, I wanted to provide kind of our valuation of the company. This was done on a sum of the parts valuation, looking at each individual asset, starting with UCP and going through the various water assets. And looking through that, provided both a low multiple and a high multiple of each asset, and came up with a final asset value both in a low multiple scenario and a high multiple scenario. And compared that to the book value of assets, and wanted to both take into account the gain that occurred, as in that case, the company would have to pay the management team 20% of that. And in addition, income taxes would be due on that. The company has $135 million in NOLs, which would first be utilized, but in the best case scenario, taxes also take a chunk out of that. So with that in mind, we had the company generating net proceeds of between $270 and $570 million through asset sales. And taking into account the net cash position of the company and subtracting out corporate SG&A over the next 5 years, came out with a final valuation of between $220 million and $516 million. And with 23 million shares outstanding, that comes to a value between $9.50 and $22.50 a share. Like a basic average of that to obtain our price target of $16 a share. And also wanted to note there that we pay close attention to margin of safety. We think the low value that we provided there is value that could be achieved in the event of a recession when these assets have to be monetized at rock bottom prices. And would note that the value we obtain even in that scenario of $9.50 is slightly above where the stock price is trading today. And despite having that margin of safety, I also wanted to highlight the risks that we see the company having, which are the following. The core water business does not generate stable cash flows, and asset sales will be required over time to generate the cash necessary to operate the business. A downturn in economic activity in Reno, Phoenix, Las Vegas would negatively impact the company. The company's asset base is illiquid. There aren't a lot of buyers of these assets out there, which limits the monetization choices the company has. With a lot of the activist activity, one aspect that I worry about is the key members of the management team, especially at Vidler Water, could choose to depart, and I think that would hurt operating results. UCB has a debt burden due in 2017 and October 2017. We expect the company to refinance before that, but a downturn in the housing market could lead to financial distress at that time. Finally, despite some positive changes, corporate governance is not ideal and likely discourages others from wanting to own the company. So I just wanted to conclude with our investment thesis again. Again, our price target for PICO is $16 a share, represents over right around a 70% premium to where the company is currently traded in the market. And again, wanted to highlight the strategic assets, water assets of the company, which we think should increase in value over time. The historically low valuation that PICO's currently being given by market participants, and a strong balance sheet that might not be obvious to investors upon first glance. With that, Shai wanted to thank you again for the chance to present. I've enjoyed it, and we'll look forward to helping with any questions you might have at this time.
Mike, that was really phenomenal. Really, thank you. So let me please ask you to turn to slide number 8, if you could, please. It seems like the very bottom point is hitting on the moat. Could you talk through what makes the moat get wider or get more narrow over time, please?
Sure. I think first, water rights and moat kind of go hand in hand. But I think when you take a big picture view of the company, has used, company being Vidler Water, has used its expertise and knowledge to put together a diversified portfolio of water assets. It was done in a time when demand maybe wasn't so high and there was more supply out there. These are assets that can't be replaced. There's a limited supply, and it also requires significant infrastructure and regulatory knowledge in order to essentially get this water to market. I guess I'd start with the Fish Springs asset. Location is a big one here. You're looking at a growing population in Reno and the North Valleys that is highly likely to occur given the job growth seen in the area. On the supply side, there is less than 100 acre-feet of water available to support this development in the North Valley, and with what we see as increasing demand and very limited supply, we don't see developers having too many other options to approach this. And other alternatives would, for Vidler and Fish Springs specifically, would mean major capital projects to build pipelines to transport additional water, and just don't see that happening. And I think the assets in Arizona and the storage credits there, and a recognition of multiple years of drought in the American Southwest and a depleting supply of water, highlighted by the elevation levels at Lake Mead, just further indicate this is a necessary resource, but one that's in increasingly short supply. And the company, through its prior work, was able to build this portfolio, and I think in the coming years, you're going to see significant demand for these assets and few other supply alternatives for people, developers, golf courses to go to get the water they need to operate. So hopefully that helps with the question.
I believe it's public knowledge that Michael Burry has done quite a bit of work in water rights himself, and some other investors have made some good and bad investments in the space. Are there any case studies or any other background materials that you've studied just about the overall subject?
Yeah, I guess it's an area where you mentioned prior investors have called attention to. And I guess over time, for myself, even I grew up in the Western U.S. and have recognized that this is both the value of water and the fact that this likely is an increasingly valuable resource over time. And so I've looked into, I guess I won't say any names here, but have looked into other, call it private equity investment vehicles that have invested in the space over time. And one thing you come across, also on the public side, various water pipeline companies, or are there other companies either focused on water or have land assets that have the water rights associated with them. I think it's a global trend. You'll find investment funds and strategies focused on water. I think it's a hard area to invest in, though. Certain water-focused investment portfolios have things like water heaters, water utilities, things like that, and those are likely to benefit to some extent from this. But with PICO and Vidler, I think we found an opportunity that has a direct benefit to decreasing water supplies, growing population that you find in the Western U.S. And I guess to further answer your question, I've looked into and communicated with a number of shareholders of PICO. I'd say a pretty well-versed shareholder base. I think the group in general has done their due diligence on it, and in many ways, I think an investor, a recent investor similar to Gate City Capital, can utilize a lot of the work they've done and a lot of work they've done on the activist side as well to in an attempt to improve future returns for shareholders.
If we could please move to slide 24. I believe you said that the low multiples were rock bottom fire sale type of assumptions. Could you walk us through what these numbers translate to in some type of $1,000 implies X, Y, or Z scenario?
Sure, and I think a good place to start is UCP. Here have kind of a 70% of book value being the low multiple. I think just looking at the comparable sheet, you can see that that's kind of low for the industry, and I think part of the perhaps part of the share price performance has been due to a lot of the activity that's gone on in PICO and stated intention to monetize the asset. Fish Springs, the $7,500 per acre foot level there, that's what water rights typically go for in, call it, downtown Reno. And in addition to obtaining those water rights, in order to make that water available in the North Valley, significant infrastructure would need to be put in place. And even an entity like Tumwa would require some sort of return on investment there to justify bringing that water to the North Valley versus using it for other uses for the growth of the city of Reno similar for the Carson City water rights at $7,500 an acre foot. Really feel that that's a large discount to both the option value that Bidler currently has with a potential client in the Dayton corridor and a discount for what similar water rights have gone for recently in the area. And finally, on the Arizona storage credits, as I mentioned, PICO was able to collect these assets at around $80 an acre foot. I've got $125 an acre foot listed as a low multiple. Several larger investors wanted to exit the market within the last 2 years, and my understanding is they sold water for $150 an acre foot, which 125 is below that. And my understanding is various municipalities in Arizona are currently willing to pay in excess of $200 an acre foot for large quantities of water. So the $125 an acre foot number there is a significant discount to what's currently being seen in the marketplace.
And if we could please move to slide 25 for a moment. There's a bullet point mentioning UCP has a considerable debt burden due in 2017. I realize you're not pitching UCP, you're pitching PICO, but I'm curious if you've looked into if the debt has if there's publicly traded bonds, if the debt has a certain yield, just to get a sense of what the debt markets might be suggesting.
Yeah, it's a $75 million note, 8.5% yield. I don't know the current price of that. My guess is it's currently at a premium. But what the company's done, or I think maybe backing up a step, my thought is, my thinking is the company looks to refinance that and some other debt the company has outstanding here in the next, call it 3 to 6 months. Speaking to the CFO there, I think it is a priority that they're focused on is refinancing that debt burden. Talking to him, I like some things he said about matching the duration of your assets to the duration of your liabilities. Currently, that's not the case. I think despite recognizing the need to extend maturities here, they want to be somewhat opportunistic and access the market at a time where they're able to essentially lock in an attractive long-term rate. I do see it as a risk. The company also has a $30 million cash balance. I expect they'll want to increase that somewhat in the coming periods as a further safeguard against upcoming maturities.
And if we could please move to the final slide again. The very last slide where you have your contact details, please.
Oh, sure.
I just want to really step back and say thank you. That was a really beautiful presentation. We really respect the level of work you do. We think that you're doing particularly unique work. We hope other audience members figure out the same thing we figured out. We know that there are a lot of places you could choose to share your wisdom. You chose to speak with us. And I just want to say thank you for being here with us today and for sharing so much of your time and wisdom. Mike, it's great to have you. We hope to have you back in the future.
Well, thank you very much. I appreciate the very kind words, and I'm thrilled to be able to present today, and look forward to continuing the relationship in the future as well. So thanks again.